Hi everyone, Andrew Dimitri here from Planet Wealth. Just going to quickly run through our trading results for February 2009. Another tough month in global stock markets. We had the All Ordinaries here in Australia was down just over 5% for the month, and in the US the S&P 500, the broad-based index, was down over 11%. So another very tough month for stock markets around the world. Still got a lot of problems in the financial industry. The credit crunch is still biting very hard, so we expect some more tough times going forward and a fair bit of uncertainty at least throughout 2009. But with some intelligent trading, we're hopeful we can still make some good profits going through this very tough time. Let's take a quick look at our different strategies. Share purchase plans is really starting to look good. We haven't made any profits for February 2009. We didn't realise any actual share purchase plans weren't actually closed by that time. But going forward now, we've got 3 or 4 ones that are looking good. We should make some good profits on at least a couple of them. So that'll make up for some lost time over the last year or so where we haven't done too many. But the beauty again of share purchase plans is that they don't cost you anything to be a part of as long as you're trading with Auto Trader, so they're free of charge and the risk is extremely low. So even while we haven't made a huge amount of money over the last year or so, we haven't lost anything, which compared to the rest of the market is an extremely good result. And now there's a few good SPPs coming through. Hopefully we'll start seeing some really good profits from this to make up for the lost time. So we recommend that everyone should have the share purchase plans as part of their balanced portfolio, because it is a great strategy with a very low risk. Moving on to the protected equity, as you know, we have suspended the strategy, not for any other reason, not because it doesn't work. The reason we've suspended it is because it simply doesn't work in this market. With the volatility as high as it is, and the cost of insurance, the cost of put options being so high because of that volatility, it's almost impossible to place intelligent trades using the protected equity strategy. Buying at the money puts is costing us far too high, around about 3 or 4 times what it was costing us in a normal market. So what we've done is we've just simply suspended that portfolio for the time being, and when the market returns to normal, which it will do at some point, then we'll reinstate that portfolio and continue trading it. Okay, so for now that's just suspended, and we'll let you know when we restart it. Renting shares in both Australia and the US has been a pretty flat month. Had a little bit of realised losses, a little bit of capital losses based on obviously the share prices, some share prices pulling back with a very tough month. Renting shares is always a neutral to bullish strategy. So if the market pulls back, we're sitting on a couple of capital losses. A lot of those are unrealised, so we can easily make them back up. So we'll see how we go. But a little bit of a tough month for that month. For this month, relatively flat on both the Australian and the US as far as income goes. But these will be good long-term strategies going forward. So it's important, again, as we've said, to balance your capital between different strategies. And while a little bit quiet like this on renting shares, we're going to make some money in the future, but being able to generate some income on other strategies is a good idea as well. Active options has roughly broken even for the month of February. We've stopped the rot a little bit. As you know, we're using a smaller account size now. We're hoping the Rob can build us up with some profits going forward now. The way we're doing things is a little bit different. We've had a couple of nice profitable trades, and we hope that'll continue going forward. So we realise active options has been a pretty tough time over the last year or so, but we're looking forward to hopefully we can slowly rebuild those portfolios back up again. And last but not least is the new option spreads portfolio. This is a different structure to what the credit spreads was in the past. We've basically stopped credit spreads and it's now been called option spreads. The difference is quite powerful. It's enabled us to get some excellent results in a very tough month. To give you an idea, through February in option spreads we had 3 trades. We risked a total of $7,464. That was our total risk, total worst case scenario. And for that we returned $3,975. So that's $3,975 in our bank in return. So that's a return on risk of around 53%. So you'll notice that's a lot higher than what we were doing in the past with credit spreads, where we were trading and getting a return on risk of around about 20% was our goal. We're getting much higher return on risks because of the way we're structuring the spread trades now. So for those of you who aren't in our option spreads, or for those of you who may have been in credit spreads in the past and lost a little bit of money in the last during this last market downturn, I'd urge you to have a good look at the way we do option spreads now, because we can definitely make profits even in this downturn market. market. You can see here February was down in Australia over 5%, but we made a return of over 53% on our money. So that's a very good return. You can see we can do it even in a down market. The reason for that is because we made some changes, which is number one is we're using John Howell, who is the professional trader who runs our trading room. We're using his technical analysis to choose the entry points for trades. So John identifies an entry point for a trade based on his analysis, and then that is confirmed by our fundamental analysis. So now we've got a two-pronged attack, both technical and fundamental analysis, before a trade will be entered. Okay, so we've got lots stronger points in order to enter a trade. We can now, of course, trade in an up or down market. Using John's analysis, he often identifies bearish trades, which means we can do reverse spreads to benefit from a downward market. To give you an idea now, in the month of March, we've already got 2 trades on, which are looking at a return on risk of around about 64% for the month, and they are both downward trades. Okay, so with the market going down like it is, we can still make excellent profits. Our return on risk of about 64% for the month of March is not locked in yet. Obviously, March hasn't finished, but we're looking very good for that those profits to be achieved. So whether the market goes up or whether it goes down, we don't care about that anymore. With option spreads, we can make money either way. And the way we structure the trades now, which read the yearbook because it explains how we do this, but we now assume a lot less risk for higher returns than what we had in the past. Okay, so less risk, less money at risk, much higher returns back in our pocket. So that makes the option spreads portfolio a much better strategy now than what it has been in the past, especially for this type of market, where we can make money even if the market continues to go down, which, you know, it's very tough to call what's going to happen in the future, but it certainly is going to be a tough few months at least, maybe for the rest of 2009. Having the ability to make money when the market goes down is very important as well. So the option spread strategy is something that everyone should have a look at. Read the new ebook, and that'll give you a good idea on what we're doing, how we structure the trades, and how and why we can make money both in up or down markets. Okay, so that gives you a pretty good summary of the trade of this strategy we've had for this month. 2 key points I want to leave you with is that of course we've said this before, but we want you to choose strategies that match your risk profile. Okay, we're still finding that people who are uncomfortable with certain levels of risk are trading the wrong strategies. So you need to be comfortable with the risk that you're taking in each strategy. And second to that, and even more importantly, is that you watch your capital allocation between strategies. We want you to be diversified across different investment strategies, so if one isn't working, you're making money from other ones. Okay, it spreads your risk and it increases your returns because you're not so reliant on one particular strategy. We have produced a video on this in the past, so go to the videos page to watch how we allocate our capital, but make sure you're diversified across a range of strategies as well. Okay, so that's it for February 2009. It's been a tough month overall, but we've got some good results, especially from option spreads, and we're looking forward to making some more profits going forward over what's bound to be a tough year in 2009, but with some intelligent structures and intelligent strategies, we can still make some very good money. So thank you very much for your support, and we'll get back to you with our March results at the end of this month. Thank you very much.